Hello, it's beginning of the month and you are joining us again in the latest news of Into Vietnam. Top stories of the day. The manufacturing PMI hits 52.1 points in November, hitting the 5-month high. Vietnam delays a plan to ease restriction on foreign stocks. And FDI firms must be 51% owned by foreign investors. Now, HSBC and market economists on December the 1st announced the Purchasing Manager Index rose to 52.1 in November from 51 in October, showing the strongest improvement in the manufacturing sector in the past 5 months. The number of new export orders rose for the third consecutive month and hit a peak since April. The amount of new employment kept rising in the past 7 months. HSBC commented the clear improvement in PMI in November reflects the relatively strong competitiveness of Vietnam's manufacturing sector. Partly thanks to its lower labor costs than China's, Vietnam's production sector is gaining a bigger share of the cake in the global market. International investors will have to wait at least 10 months for Vietnam to ease curbs on foreign shareholders after a 2013 proposal to increase ownership limits was shelved. Mr. Vũ Bằng, chairman of the State Security Commission, said policymakers must revise a Ministry of Finance plan that recommended lifting the foreign cap on voting shares in some industries to 60% from 49%. Speculation that ownership limits for the $56 billion stock market would be raised helped to boost the benchmark VN index by 22% in 2013 and another 13% this year. Foreign investor companies with 51% of foreign funds are eligible to preferential management, incentives and policy for FDI companies, while those with less than 51% owned by foreign investors will be equally treated as Vietnamese ones. The classification is stipulated in the revised corporate law and the law on investment recently approved by the Vietnam National Assembly. Local business say the clear-cut regulation will create a more favorable conditions for investment, merging and acquisition activities in the country. Ho Chi Minh City attracts $4.4 billion of remittances in the past 11 months, while Hanoi IIP rise 4.6% in November, and more to follow. The southern hub of Ho Chi Minh City attracted $4.4 billion of inbound remittances between January and November. The total amount for the year is expected to hit over $5 billion this year, rising $200 million from 2013. According to data by the State Bank of Vietnam's branch in the city, inbound money into the city mainly poured into manufacturing and real estate sectors. The Municipal Statistics Department said Hanoi Index of Industrial Production rose 4.6% in November from the previous month and 7.3% against the corresponding period last year. In details, the mining sector recorded the most impressive growth of 16.1% on month and 33.7% on year. It was followed by manufacturing and processing sector, electricity distribution, water supply and management. In 11 months through November, Hanoi's IIP rose 4.6% on month, on year, with 9 out of 19 sectors recording lower revenues on year. Amid a lot of difficulties, key manufacturing sectors in the capital city are improving slightly from the same period last year. The Finance Ministry revealed SOEs have divested nearly 2.3 trillion dong or $108 million from non-core businesses in the first 9 months of the year. The figure was 3.7 times higher than that of 2013, but accounted for only 10.2% of the total proposal divestment of 22.5 trillion dong or $1 billion by 2015. Sectors for divestment include securities, banking, insurance, and real estate. Most of the divestment activities took place in the banking sector. However, since bank stocks have lost their previous attraction, stolen enterprises have to forego profits by selling at prices lower than or equal to the initial purchasing price for these stocks. The State Bank of Vietnam and the Ministry of Construction have officially released Circular Number 18 to amend and supplement some articles of Circular 07, regulating the targets who can have housing assistance under Resolution Number 2 of the government. The loosening of the 30 trillion dong home loan package conditions has positively affected Ho Chi Minh City real estate market. Many businesses have get ready for the change, and in near future, apartments meeting the requirement will be launched. Watch the following report for more.
Mr. Lê Minh Khanh, Director of Sales and Marketing, Nam Long Investment JSC, said during the company's coordination with VITV to implement the 30 trillion credit package, there were many demands and about 300 customers of the business was dispersed. Additionally, after the official release of the two guidance circulars from SPV and MOC, 500 more records were approved. It has positively affected customer psychology. Thereby, his company had reached its business plan in 2014.
Thì cái việc mà ra thông tư hướng dẫn của số 1 là giúp chúng tôi tự tin là khách hàng của chúng tôi phải giải ngân được ngay lập tức sau khi có thông tư hướng dẫn. Chính vì thế mà khi mà thông tư hướng dẫn mà ra thì toàn bộ khách hàng của chúng tôi sẽ được giải ngân. Điều đó giúp chúng tôi đẩy nhanh hơn tốc độ bán hàng.
Ho Chi Minh City Real Estate Market Survey shows some businesses have continuously launched their products to wait in front for the circular. After the VITV's disbursement for 500 customers, Home Ngân Company finished the first block and started to build the third one, Block B1, with 357 apartments, area from 45.5 to 80 square meter, with price at least 596 million dong per complete unit. Or Hưng Thịnh Company with Project 8X, particularly Project 8X Plus, with apartments from 63 to 83 square meter. It has partly offset the market supply for those who really need.
Đây là một cái tín hiệu rất là tốt và các cái thông tư của Bộ Xây dựng cũng như là của ngành nhà nước cũng nhằm để thực hiện điều này nhanh hơn. Để tôi đề nghị là sắp tới đây thực hiện cái thông tư 32 của ngành nhà nước á, thì có một vấn đề rất quan trọng, đó là ngân hàng thương mại cụ thể khi giải quyết cho người tiêu dùng là phải thông thoáng trong chuyện mà chứng minh thu nhập của người tiêu dùng, chứ mà bắt buộc người ta phải có thêm một cái chứng từ giống như là tương đương với một cái chứng từ thế chấp nữa thì điều đó sẽ gây khó khăn cho người tiêu dùng khi vay.
Chúng ta phải nói một cách rất là công bằng như thế này. Chúng ta không thể nào bắt người ta phải tin mình, mà mình phải làm cho người ta tin. Ở đây là chúng tôi nói đến cái chủ đầu tư ấy. Cái chủ đầu tư có triển khai dự án và thực hiện đúng tiến độ thì chắc chắn rằng là khách hàng người ta sẽ đến với mình. Đó. Cho nên là trong cái thời gian mà khoảng 2 quý trở lại đây thì cái việc mà các cái chủ đầu tư triển khai ra xây dựng nhanh đối với những cái dự án của mình làm cho cái người dân người ta đến với dự án rất nhanh.
According to Circular Number 18 of MOC, the most notable point is that customers don't have to confirm their income. However, they still have to do so in case banks want to assure their repayment plans. Planning maturing contracts between customers and proprietors is based on the apartment's design, but not to exceed 70 square meter. The MOC has sent an official dispatch to the SPV to put 13 more housing projects into the 30 trillion credit package. Specifically, there are 9 social building projects and 4 commercial building projects that change into social building projects.
And now before we go, let's check out today's local gold prices, forex and stock market. Well, that's all for this edition of Into Vietnam. Thank you so much for watching. We'll see you soon and goodbye for now.